Welcome back. Thanks for watching another video. So are you looking for another way to save on taxes? If so, in this video I'm going to walk through the health savings account, also known as the HSA. So HSA has been around for a while. We're just not seeing a lot of people utilize it, and there's a lot of tax benefits to it. So I'm going to first go through a presentation. It's going to be really quick, and then I'm going to show you an example of a tax return of an individual that contributes to an HSA account, and you'll be able to see their tax savings. So there's a lot of benefits to it, almost more than a 401k plan. So again, if you have any questions, leave them in the comments below. Thanks again for watching.
All right, so the health savings account, which is also known as the HSA, essentially it's a tax advantage medical savings account. So the one key requirement here is that you're enrolled in a high deductible health plan. So at your employer, you're getting health insurance. You want to make sure that the plan that you're associated with is a high deductible plan. If so, your employer should offer this health savings account. And essentially what you're doing is you're putting funds into this account, and these funds that you put in are not subject to tax. So it's kind of like that pre-tax, kind of like a 401k. And what you do is you use these funds, right? So you kind of build up this account, and something were to happen, you need to see a doctor, you're having surgery, prescriptions. What you can do is you can take money out of this account and you don't pay tax on it. Now, the contribution limits for a family every year, so these are annual contribution limits, and this is just in 2023. So every year it changes. The max contribution you can put in is $7,300. And if you're single, the max you can put in is $3,650. There is a catch up for those that are over a certain age, where you can put in an additional $1,000. But again, how this whole HSA works is you're putting money into the account and you take money out of it to use for medical purposes. So some of the benefits here of the HSA. So you put the money in and you decide, okay, I'm not going to use anything. Nothing happened during the year. I don't need to take money out. That money grows, right? So then you're in year two, you put more money into it. Year two, you don't need to take any money out. You take what you put in for year one, for year two, and now you got this nice lump sum here, right? So if you go back to the contribution limits, if you put in $7,300 in year one, you didn't touch it. You put another $73 in year two, you didn't touch it. Now you got, $14,600 sitting in this account to be used at a future date. Unlike FSA plans or flexible spending accounts, if you put money into it, if you don't use it, you essentially lose it and you start all over again. So that's a nice benefit of the HSA. Like I said earlier, contributions are fully deductible right from your gross income, and I'm going to show that to you in this last part of this presentation of a tax return example. Interest and earnings in the HSA account grow tax-free. So that's $7,300. If you don't do anything to it at the end of year one, going into year two might be $7,400 or $7,500. So it's kind of like a Roth in that standpoint where it's going to grow and you're not going to have to pay any tax on that growth. Distributions, right? So you take money out of that account and you use it only for qualified medical costs. When you take money out of that account, you do not have to pay any tax on it. So it's another benefit. So you're putting money in, it's deductible from your gross wages, right? It grows tax-free, and you take money out and you don't have to pay tax on it. So these three bullet points, this one, are just key benefits, right? And then the last one here is portable, meaning that you're working for an employer, you decide to leave, you have $20,000 in your HSA, that stays with you. It doesn't stay with the employer, it stays with you. So you can keep that HSA, and then you decide to work for another company, you start a new HSA account, and you can kind of grow that. The key here is, if you're younger, is to kind of slowly build this up. As we've seen with all healthcare costs, they're not decreasing. So, and as the older you get, the more cost you're going to spend on healthcare. So it's very prudent to start building up this HSA account, especially as you see these, three benefits here, these three key benefits: contributions you get to deduct on your taxes, interest and earnings in the HSA grow tax-free, and you take distributions out. You don't have to pay any taxes on them. So again, I see a lot of people that have HSA offerings at their employers, but they're not taking advantage of it. And it's just, I don't say it's throwing money away, but it's a very nice benefit that I think everyone should kind of contribute to. So next up is the tax return example. All right, the last part here is an example of a tax return. Okay, so we got two people here. They have kids, and their adjusted gross income here is about $222,000, and at the end of the year they owe about $700. Okay, so they owe that amount of money. And if we go to Schedule 1, the additional income adjustments to income, right? We're going to go and see the health savings account deduction. So they have nothing here. Okay. Now, and they owe $735. Okay. Now, if we were to change this and they decide to contribute the max, right, as a family, so it's $7,300. And we're going to calculate that or recalculate it. We're going to first go to, let's see here. We're going to go to the HSA schedule, the tax form. So here's the health savings account. And you can see here, they're going to benefit the $7,300, get that full benefit. So this is the tax form. We're going to go to schedule number 1 and go down to page 2, HSA. Here's that $7,300. And then we're going to go to page 1 and go all the way down. And now they're in a refund position. Okay. So they saved about $1,700, right, by contributing $7,300. So, you could say here they saved money, right? They saved about $17, maybe close to $1,800, right? Because now they're getting a refund. And remember, before they owed $7,500. In terms of like a cash position, they had to write a check for $7,300 to put into their HSA account. But remember, that's a deduction. So they're putting that money into their account. Okay. It's going to grow tax free. They get to take that money out whenever they want to pay for medical costs. And when they take that money out, they don't have to pay taxes. And they also get this deduction. So it's a win-win all the way around. And if you have the opportunity, if your employer offers this HSA account, I highly recommend that you start contributing to it. If you're young, do it, build up the account. So when you're older, you have this this nest egg that you can kind of pull from for medical costs. Or if you're young, you don't have children yet, that's another reason to do it, because, once you have children, there's going to be a lot of visits to the doctor's office. Another reason to kind of build up this account. So there's a lot of benefits to having one, and I highly recommend it. So if you have any questions, leave them in the comments below. Thanks for watching.